Hi, and thank you for joining us here at Tax Talk UK, where we talk about all things tax and also other important aspects of running your small business, working for yourself, being self-employed. So today we're going to talk about the VAT margin scheme. And before I get on to that, if I could please ask you to take a moment to subscribe to our YouTube channel. That way you'll easily be able to refer back to this information if you should need to, as well as being able to find other information that we have available on a whole host of topics, all aimed at supporting you in your self-employment and catalogued under our playlist. So if you find your situation that you're looking for some information on in the playlist list, and then within that playlist you will find the information that is relevant to you. So on then to the VAT margin scheme. So as we've talked about before, there's lots of different schemes available for VAT. Some will and some won't apply to you. Some will and some won't be efficient for you to use. And so we decided that we would tackle the schemes one at a time to avoid any confusion. So today we're talking about the margin scheme for VAT. So I don't intend to go into specific detail for the different rules that apply for different groups that will be using the margin scheme. I'm going to pop the link in the description to gov.uk so that if you do fall into one of those groups, you can find the specific rules that are applicable to you. But what I intend to do today is to explain what a margin scheme is, so that you at least have an overall knowledge, and you can then know whether it may or may not be relevant to your specific business and your individual circumstances. So a VAT margin scheme then. So in standard VAT accounting, of course, you have your sale and you charge your VAT on the full amount of that sale at the appropriate rate. And then your purchases, you're reclaiming any VAT paid at whichever rate that you've paid it, the amount that you've paid. So there's some scenarios where that's not very efficient. And that can be problematic for the business. So for those kind of businesses could consider the VAT margin scheme. So what that means is quite simple, that you only account for VAT on the margin or the profit that you've made on that, the gross profit that you've made on that sale. And what that means then is that you've made your purchase, that you don't account for any VAT on that. Invariably, to be eligible, you won't have paid any VAT in any case. And then you look at how much your sale is, and you compare that with your cost of sale. So let's think of a really straightforward example to help illustrate what I'm talking about. So let's say, for example, that you buy an item for £1,000, that you don't pay any VAT, you haven't paid any VAT on that, and so your cost of sale is £1,000. Now, let's imagine that you then sell that item for £1,600. So as I explained before, we're only interested in the margin on that sale. So out of that £1,600, we're going to take off the £1,000 for the cost of the sale, and that leaves us with £600. And that £600 is what we're going to account for the VAT on. So that in order to do that, we imagine that £600 to be the gross amount, and then we're going to work out the amount of VAT that would be included in that. Now, because the VAT is 20% currently, that's really simple. We just divide it by 6, and so that means that £100 is the VAT incurred in that sale, and that's the amount that we need to be accounting for. So of the whole £1,600 sale, then we're going to account for £100 of sales VAT on that, and then there's nothing to reclaim, because that's the whole point of the margin scheme. Now, it's important, if you're operating a VAT margin scheme, that the invoice does indicate that, so that nobody that's bought your item is then reclaiming VAT that they obviously haven't actually paid it at an ordinary rate. So hopefully that helps to explain. So with a VAT margin scheme in place, we're only accounting for VAT on the margin. So therefore we take the actual cost of the sale, and just to be clear, we're only talking about the actual cost of the sale. So perhaps you had to sort of incur some other costs to do with that sale, but we're only interested in the cost of the sale when we're calculating the margin. We're only taking that cost of sale off of the sale price, and the amount left for we're then working back to work out what the VAT element of the margin is. So as I explained in that example, we have a sale of £1,600. We take off the cost of sale of £1,000, so we're left with a margin of £600, and the VAT element of that is £100. So the VAT included in that 1,600 sale. So for the purposes of when you're reporting to HMRC, your net sale is £1,500 and your VAT is £100, and that's what you pay to HMRC. Obviously, you know that gets reported with other sales, and perhaps you may have things that aren't cost of sales that you can reclaim the VAT on. So then you would be doing your VAT return as normal. What is important is that you do keep an accurate record of your cost of sales. So you need to have an accurate stock control, especially if you're keeping items for any length of time. So the type of items this is good for is second-hand goods, where you might be buying from the general public and selling to the general public. So you would find that you've got no VAT to reclaim on your cost of sale anyway, and you're having to stand the VAT element yourself, and therefore it can be a real help on the cash flow to use the margin scheme. Second-hand vehicles is another common application, and as I said, I am going to put the link in the description to the section on gov.uk, because if you are within a specific group of users of the margin scheme, there are slight differences on the rules and eligibility. So if you feel that now understanding what the VAT margin schemes mean, if you think that is something that may be applicable for your individual business, then you can look into that in more detail and make sure that you look at to see if your specific circumstances are carrying specific rules that you, of course, if you're going to operate the margin scheme, then you need to know the rules that apply to you. So hopefully this helps you to have an understanding of what a VAT margin scheme is, what it's aiming to achieve, and so this gives you an indication as to whether it is something that is relevant for you to look at in more detail. Thank you very much for watching, and as I mentioned earlier, if you could please take the time to subscribe to our YouTube channel. Thank you. Goodbye.